Hey people, and welcome to episode 17 of A Cup of Positivity. This week I have Sonya Matharu from The Mortgage Mum as my guest. She is a mortgage broker, but not your typical mortgage broker. She tells us her story about how she ended up becoming a broker completely by accident after a redundancy, and it was the last thing she expected from her career, but now she loves it. We talk all about mortgages for homeowners, what you need to know before you buy, and how to look after your credit file. Sonya is also really passionate about turning this usually boring subject into a more fun one, and has a dream of teaching teenagers all about money mindset and saving for your future. She also surprised me by informing me that some lenders will even look at your social media profiles to support your mortgage application. Sonya is using her skills as well as her initiative to make herself known within this typically male-dominated industry, and I'm grateful that I'm able to share her story as an inspiration to you. As always, I hope you enjoy the episode and you learn something new. Don't forget to like, share and comment if you do. See you soon! Hey Sonya, welcome to A Cup of Positivity.
Hello Martha, thank you so much for having me.
Yeah, thank you for coming. I'm actually super excited about it because I feel like it's a topic that doesn't get discussed enough. But yeah, before I start actually, did you bring your cup of tea with you?
Yes, I did. I've got it here. I've got just a boring, like standard cup of tea. Milk, no sugar. And yeah, I've got it actually in my newest mug. It's my collection, and I don't know if you can see what it says, but my partner actually gifted it to me. I'll turn it around so I can read it. But it says, "Remember, you are braver than you believe, stronger than you feel, and smarter than you think."
Oh, that's nice.
Really sweet. So yeah, I've got my tea in that mug today.
That's awesome. I love that. Is it like in a heart shape as well?
Yeah, it kind of looks it. It's like, it's not a heart shape as such, but it's
like
quite wide at the top. Yeah, I guess
Yeah.
it kind of is. It has a little heart here. But, yeah,
that's really
cute. My tea. What about you? Have you got yours?
I do. My mug isn't as cute as my Monopoly go to jail mug.
Oh, amazing.
And I'm currently drinking Twist teas because they were kind enough to gift me a box of samples. Yeah, which I was super excited about. So today I've got sorry?
They like fun flavors.
Yeah, they're like super fun flavors. So on one of my episodes, I had a mint chocolate chip.
Oh.
Yeah, I've never had a tea that flavor before, and that was nice. But yeah, today I've got summer berries, and it's got apple, rose hip, elderberries, freeze-dried raspberry and strawberry pieces, orange peel. So it's just like super fruity and summery, and it's like a really deep red as well, and it smells really good.
Nice. That sounds good. What was that? Twist teas?
Twist teas, yeah. Like nice. Twist.
I'll have a look.
And then teas.
Yeah. They sound really nice.
Yeah, I'm going to be doing a few things with them on my Instagram, so you'll be able to see as well.
Oh, cool.
So yeah, that's me today, going to jail with my summer berries tea.
I love that. I love Monopoly. Well, I say I have like a love-hate relationship with Monopoly. It's one of those that just really, like, I get super competitive.
Yeah.
And there's been many, like, my partner and I cannot play it together because I swear last time we did, we nearly broke up.
Oh no.
So every time like someone suggests that, we're like, no, can't play it.
That's hilarious. Has that got anything to do with your job?
No, I don't know. I just think like I'm competitive.
Yeah.
Like my inner Monica, Monica from Friends.
Oh yeah.
I'm not a competitive person, but then I guess like with certain people, like family and like of your partner, he's just really smug when he knows he's winning against me. Annoying. And that's what I don't like.
So it's not actually it's not actually the Monopoly's fault.
It's actually just us two. Yeah. But I blame Monopoly. It brings out the worst in us, basically. Yeah. So
have you tried any other games?
Yes, yeah. So we love Articulate. Is it Articulate or Articulate?
Oh, Articulate, yeah. I've never played it, I've heard of it.
Yeah, that's a really good one. That's like my whole family really enjoys that one. So that's always one that comes out. But yeah, there's just always so many of us as well, and you'll try and play a game, but then it never really goes anywhere because everyone's just like talking and stuff's happening. But yeah, articulate, I'd say.
In my family, we're very like structured, so
Yeah.
we'll end up like, maybe not so much me or my mum because we're quite chilled out, but my brothers and my dad will end up arguing about the instructions, and then it'll be like arguing about the wording in the instructions and clarifying that specific rule. So it's just like, super stressful.
Do you actually ever end up playing the game, or just it's the instructions?
We do eventually. We just have like an hour break to discuss the instructions.
Yeah, I've noticed with my family, we don't tend to read the instructions, and it's only when like someone that's outside of our family come in and play a game with us, they're like, I don't think I've ever played it like this. It's like, oh, we just obviously have our own version of things.
That's
it's
hilarious.
like, aren't you supposed to do that? I'm like, we've never done that. It's like, but then you're supposed to do this, and we're like, no, we don't do that. Like, just make up our own rules.
Oh, that's funny. Oh, all right. Well, let's start with an introduction to who you are. Just for anyone who isn't following you and doesn't know what you do or anything about you, let's go from there.
Okay, so I am Sonya Matharu. I am a mortgage broker based in Chichester, West Sussex, although I do operate nationwide. I run my business within a mortgage brokerage firm that's called The Mortgage Mum, which was founded by Sarah Tucker. Sarah's created an amazing space for women to have work-life balance within a very male-dominated industry. So that's incredible. I joined the Mortgage Mum end of March this year, so like right in the middle of going into lockdown. I think Sarah and I were having conversations, and so towards the end of March I officially joined. And it's been a perfect fit, really. Sarah's been incredible and so supportive, and has given me a place to thrive in this industry, which I'm really grateful for. In addition to obviously me being a mortgage broker and helping people buy houses and keep their houses, I am dedicated to simplifying the industry. So simplifying the terminology, helping people understand the process that they're going to be involved in or are involved in, and just make it really accessible and approachable. It's an overwhelming thing. We're not taught this in schools, and which is crazy to me. And I've just heard so many times, had I known this, I wouldn't have done that, and then I wouldn't be in this situation now where I'm struggling to get a mortgage or something like that. So those kind of things made me think, well, it's not really okay that not many people know how things work or what can affect your mortgage application. So kind of took it upon myself to do what I could to give people that information. So that's where my Facebook and my Instagram kind of came about, just putting stuff on there that's hopefully easy to understand, and just educate people on something that's really important and could affect them. Also starting to work on hopefully educating teenagers soon, which is exciting. I'm hoping to obviously start that towards the end of the year, maybe next year, but I'm having conversations with schools at the moment to see if I can go in and talk to teenagers about credit and more importantly managing it, because although teenagers, it seems like they're quite young to be doing that, but I think 16, 17, 18 is the age you're able to apply for credit. So I think having a really good understanding of what credit actually is, getting a credit card, it's not free money, it's expensive, and if it's not managed properly, it can have a negative impact on your future. Missed payments, defaults, arrears based on your credit file for 6 years. So something that might have happened 4 years ago, you might think it's not relevant now, you might not even remember it happened, but unfortunately it does have an impact. So that's something that I'm I feel really strongly about. So I'm excited to start doing that.
Yeah.
That's kind of me in a nutshell.
Yeah.
Introductions, I find them really weird talking about yourself.
No, I love that as well, because on your Instagram, I know you've got, I think it's on your bio or on one of your posts where you introduce yourself, you describe yourself as not your average broker. So that was like one of my questions is, oh, okay, well, why is she not your average broker? But now you've like explained it. I think it's really cool that you are going and teaching teenagers, because from the age of 16, I was 15 when I got my first job.
Yes.
The minute you're earning money, you need to know what to do with that money. What's the sensible thing to do? Start saving, and how do I save? How much do I save? Where do I put it? And there's just so many things that you don't learn at school, like you say.
Yeah, definitely. And like money mindset, I think that's so important. Like, 'cause we kind of leave school and we're just kind of left to kind of figure things out. I mean, they have, they pull you aside when you're in year 9, age 14, like, what do you want to do for your career, and pick your options and all of that. But then they don't tell you, what to do when you're outside of school and you've got your job, how you, like, I think you're so right. It's something that I feel really does need to change, definitely.
That's amazing.
Yeah.
So hopefully, like in this episode, then we'll kind of break down some of like the jargon that comes with like mortgages and stuff. So maybe this can be like an intro to mortgages. So let's start with like, what kind of products are there for people who want to buy their first home, for example?
Okay, so mortgage products. You either have something that's called a fixed rate product, where you're fixed in for a certain amount of time. So you can either be fixed in for 2 years, 3 years, 5 years. There's even 10-year fixes, but that's a bit too long, and only really certain select circumstances where that's good advice to recommend that. But yeah, you're fixed in for a certain amount of time, and what's good with a fixed rate is you have stability with that monthly payment. The interest rate is set and it's going to be fixed for that amount for whatever time period you've chosen, so 2 year, 3 year, or 5 year. So yeah, you have stability with the monthly payments. You know exactly what you're paying each month. There's also a variable, and there's quite a few types of variables, but a variable, it changes. So it can either go up or down depending, and it will change depending on what it's tracking. So there's a tracker variable, and that tracks the Bank of England's base rate.
Okay.
So it will fall or rise in line with that. There's standard variable rate, and that is one that tracks what the lender's variable rate is. So each lender will have a specific variable rate, and they can change that whenever they like. So 1 month your payment would be, say, that £800, and then the next month it could be £850, or it could be £900. It will change. There's also discounted ones as well. So a standard variable at a discounted rate, but again, it's a type of variable, so it will fluctuate depending on what that's doing. Obviously, I said about the pros of a fixed rate is the stability, but also one of the negatives of a fixed rate is if interest rates do fall, you won't benefit from the cheaper rate, but you know what it is. But then with the variable, obviously the benefits are, if interest rates were to fall, your monthly payment would drop, but at the same time, if they were to rise, so does your monthly payment. But those are the main products really that are available with regards to monthly payment and interest rates.
Mm-hmm. And then what would a first time buyer what would they be looking at in terms of deposit amount?
So now, because of COVID, the big C word, it was like Brexit before, and now it's this, isn't it? But yeah, so because of COVID, the higher loan to value mortgages, which allowed you to put in a 5% deposit, are non-existent at the moment, unless you're doing something, unless you're doing Help to Buy, which is the scheme for new builds. That allows you to put in a 5% deposit. But outside of that, there isn't anything available. 10% deposits, they're less than a handful really of lenders that are doing those at the moment, and the criteria for those is rigid. They're very strict, so it's a bit of a balancing act with those. I'm saying to clients, if you could potentially get an additional 5%, if you've got your 10% deposit, if you can get 5% extra, which is a big ask because it's a lot of money, then that's going to open you up to more lenders. So really you could get away with a 10% deposit, but you'd only be looking at 3-4 lenders, and they're hard to get at the moment. But 15%, if you want to open yourself up to more lenders, that's the ideal really.
Okay. And then one of my other questions, which is more jargon based, is the loan to value. What does loan to value mean, and why is it important to know?
Okay, yeah. So loan to value, it's the loan amount against the value or purchase price of your property.
Mm-hmm.
So the difference between the two is your deposit or your equity if you're a homeowner already. If you've got a 10% deposit, your loan to value ratio is 90% because you're putting in 10%.
Yeah.
That's the easiest way, I think, to explain how you work out your loan to value. So it's whatever percentage of a deposit you've got. So it's like take away that really.
Yeah.
And if you've got 15%, then obviously it's 85% loan to value. And it's important because basically the more equity or the more deposit you've got, the better access to products you're going to have.
Mm-hmm.
And you're going to be almost rewarded with more competitive rates, because the more money that's in the property, it's less riskier for the lender. The higher loan to value products are more risky for the lender, so then they'll make them more expensive. So the rates are higher if you've got an 85% mortgage to 90%, because of the risk element, because there could be a situation where you go into negative equity where you owe more on the mortgage than the house is worth.
Mm-hmm.
So I hope that makes sense.
Yeah.
Yeah.
Makes sense.
Good. Yeah.
And then I know you spoke about mortgage products, but then what is the difference between a repayment mortgage and an interest-only mortgage?
Okay, so repayment, it's also known as capital repayment. So just if you see those two, you might think what the difference is, but they're the same. So capital repayment or repayment mortgages, you're repaying the mortgage. So you'll tend to have a mortgage term that's, the standard term's like 25 years. Could be longer, could be less, but that's kind of like the average. You'll take out your mortgage, and in theory at the end of the 25 years, if you've made every payment, you will have repaid the mortgage balance.
Mm-hmm.
So every year you'll get an annual statement and you'll see it's going down.
Yeah. With
interest only, you are only paying the interest. So it's cheaper. It's a cheaper monthly repayment because you're only paying the interest, but at the end of the 25 years, you're still going to owe the same amount you've taken out, and you'll have to repay that with a repayment strategy. That repayment strategy would it's most commonly the sale of the property, so you could downsize and repay it, or pensions, endowments, investments, or something like that. But yeah, so at the end, you'll have to repay that somehow.
What is, I suppose the deal with those interest-only ones is just to get you on the property market, right? Because sometimes when I think about it, I'm just like, why would you only pay the interest?
Yeah.
You'd be hit with a bill at the end. Yeah.
So most commonly, don't really tend to do them for first-time buyers.
Yeah.
Because interest only for residential is really complex. They're more commonly known, so you tend to use those for buy-to-lets.
Yeah.
So then you make a profit with the rent and the mortgage payment, and because they're investments, so you sell that property at the end of it, and it's not that much of a big deal really. But with residential, it's a lot more complex. and the lender's criteria differs on this. So most commonly you need a bigger deposit, so you'll be looking at 50%.
Wow.
Yeah 50% on interest only. It's one of those ones for residential. It's really tricky to explain without going, because it depends on the club, but they'll have set criteria. Like I said, they might need to earn an X amount of money. They'll have to have a 50% deposit or 50% equity in the property. There's loads of things like a tick box that they'll have to fit. But most commonly it would be buy to let landlords wanting interest only, which makes sense, and that's not an issue.
Okay, so what are you seeing at the moment with first time buyers? Like, what are people struggling with obviously COVID happening now? And how has like your job changed with everything that's happening?
So my job has changed quite a bit. It's taking a lot longer to place cases, and once you have placed them, the whole application process when it gets to the lender is a lot longer. I'll explain that in a moment. But what I'm finding hard at the moment, well, what I guess first time buyers are finding hard at the moment, is that deposit. So they've been told, like last year, because they could get 10% deposits, it wasn't a big deal, and they've been saving, and they've just started to get that 10% deposit that they need. And then the goalpost has moved. 10%, they're hard to get at the moment. They don't fit that lender's criteria. They're having to find an extra 5%. And like I said, 5% more, it doesn't sound like a lot, but when it's 15% of a property purchase price, it's a significant amount of money.
I mean, especially in London as well, because I'm in London, so that would be a massive amount. Exactly.
So there's a lot of tapping up mum and dad to see if they can, but obviously if they can't, then it's disheartening for them. So that's one of the things as well. And if you're on furlough, although lenders are taking a view on it and they're still taking that income, but of course it's 80% of your income, not 100%. So then that's affecting affordability. So I would say those are the two things. But saying that, first time buyers, they're keen to move, they're keen to do it, so they're trying. I'm seeing a lot of people, I've had a few first time buyers complete within COVID, and it's possible, but it's just harder. And having that patience and understanding of, this is a really strange time at the moment, so this application process is going to be a bit more lengthier than you would normally expect. And with from my perspective of things, it's been harder because before COVID, you'd get a case on your desk. Every case is different. You can have 5 first-time buyers and it's all completely different, which is one of the things I love about my job. But you would get a case, an inquiry come through, and you'd kind of have a rough idea of which lender would suit them, because the lender's criteria at the back of your hand, because you've been dealing with them for years, and whenever there's criteria changes, they introduce it in, and it doesn't change every month or so. So you get an understanding of what lender does what. But with COVID, they've changed the criteria, and it changes. Sometimes it feels like it's changing every day. It's just hard to know. So one lender would look at something and you've always known that they do, but it's like, do they now? So it's having to have individual conversations with lenders to see if they actually are still doing that. And it's taking a bit more time, because you're having to have conversations with people and rely on them coming back to you and things. And I'm doing it, so you can imagine all the other brokers that are doing it as well. It's just a bit of time. And application wise, a lot before COVID, a lot of it was automated, so it would go into the system would kind of review it, and if anything really flags up, then it would get passed for manual underwriting. But a lot of the lenders now, cancelled the automated process, and every application is getting, well, almost every application is getting looked at by a human. That's where the delays are coming in now. It's because it's having to be assessed, and it's everyone. So some lenders where they used to have a 4-day turnaround to get, from application to decision.
Yeah.
We're looking at a month now on a good day.
Oh.
No, there are some lenders that are swift, but a lot of them aren't at the moment, and it's just, it kind of is what it is. The new normal, as everyone says.
Mm-hmm. Yeah.
Yeah.
What are investors doing? Are they still like hunting around, or are people kind of waiting, seeing what's happening?
No, I'm still seeing a lot of buy-to-let inquiries through, which is positive. Yeah, I actually done a couple during COVID, which I was surprised when I got them through. Not when I got them through, but when I had them when I had the inquiries come in.
Yeah.
But no, that was good. So yeah, I don't think they're really that. I haven't seen a negative impact on that.
That's good.
Yeah.
Okay, so how important is your credit report, and how can we track and manage it?
Okay, so I'd say it's very important to keep on top of it for many reasons, really, because sometimes mistakes can go onto your credit report. It might say that you've missed a payment, but you never have.
Yeah.
And it's easier to rectify it sooner rather than when someone tells you to get your report when you're getting a mortgage, and you see it 3 years down the line and you want to get it removed, and the company's not interested in getting it removed because it was so long ago. So I think it's always worth keeping on top of it. I've got a link on my Instagram for a company. It's called Check My File. They're really good because they pull data from 3 of the main credit agencies that lenders use. So lenders will tend to they'll either look at Equifax, Experian, or TransUnion.
Yeah.
And you can get individual reports from all 3. But Check My File, it pulls data from all 3 of them and it collates it into one report, so you can see exactly what's on each of those. That's a really good one.
Do you have to pay for it?
Yes, so it's free for 30 days. So if you sign up, get your report, download it as a PDF, and then you can cancel it after that, and then you won't get charged. Or you can just keep it running, and I think it's like £14 a month.
Okay.
After that, but I just keep mine running because I like to keep on top of it, and it will notify you as well if anything's like if your credit report's gone down or if there's something that's come up. You can look at it and see what that is, and if it's a mistake, you can get it rectified. Or I think it's really good to keep on top of it, and because it is important when it comes to your mortgage. But I say that obviously a squeaky clean report is ideal. It's going to give you access to more lenders, more high street lenders. But if there is something on your credit file, I don't want people listening to this to worry and think, I'm screwed, I can't get a mortgage, because you can. It's just, it might not be the most competitive, or it might not be a high street lender.
Yeah.
But there are still lenders that will look at it and take a view on it. And as long as we can show that it's behind you, like explain like why that's happened and you're aware of it now, and moving forward you're all good.
Yeah.
Then there's still possibilities out there.
And how can people, like if they maybe have a credit history that's not great, how can they begin to build up their credit score again?
Yeah, so the main things that affect your credit score are not making payments on time. So if you've got a credit card, it's making sure you pay at least the minimum of each month. The best thing that I could recommend for anybody that's got a credit agreement is setting up a direct debit.
Yeah.
set up a direct debit for the minimum. Even if you're someone that pays off the credit card each month and you think, oh, I don't want to just pay off the minimum, I'll pay it off, that's fine, but still set up a direct debit for the minimum, because you can still pay above that anyway.
Yeah.
Because life happens, and, you know, emergencies happen, something significant in your life can happen where your head is not in the everyday stuff, especially with what's been happening, you know, with regards to COVID this year. I think we've had a lot of people where their head's not been quite in it, and there's been devastation and something that's taken their mind off of things, and it's just one less thing for you to then have to worry about. So what I'm saying is, set up the direct debit, because then if you're at the hospital looking after somebody or whatever, and you think, oh crap, I didn't pay my bill, it's already done for you. You've made that minimum payment. You're not going to get a negative, like, it's not going to have a negative impact on your credit score, but it would have done if you hadn't done that.
Yeah.
So make that minimum payment, and then, you know, when you remember to, you can then clear it if that's something that you want to do.
Mm-hmm.
So yeah, just keeping on top of that. I think looking at your finances and seeing what you've got, because I think a lot of people, from experience of dealing with people that's had impaired credit, they kind of bury their head in the sand with it. They'll think it's so bad that they just don't know how to get out of it. But then when you sit down with them and say, look, this is what you've got, like, kind of like show them, see it all on the credit file, and they're like, oh, I could probably get rid of that, I could probably pay that off. It's just having a bit of a clear out. I think just looking at what you've got and then coming up with a plan to maintain those, and not miss them. So setting up those direct debits and clearing any credit commitments that you don't use, or that you've kind of just left open with a balance, but you could actually clear them. Yeah, just, I think, yeah, I would say just looking at what you've got and assessing it and just coming up with a plan forward and thinking, okay, that's happened, it's not been ideal, but I've got a plan to work on it and come out of it.
And are there like strategies as well that people like use to build up their credit score maybe a bit faster? Because I've seen online things like credit score building cards, and like using your card as you would your debit card and then paying it off every month and things like that. Is that just stuff that's just floating around online, or is that actually a sensible thing to do?
I would say those are for people who haven't got any credit. So they don't have a credit history at all. I've seen it with, well, mostly with first-time buyers, where you'd think they had a perfect credit score, because they've got no credit. They're not on the electoral roll, which is something that helps you. So and yeah, so then they're like, why have I got a really poor score? It's because they haven't got a history. So the credit agency can't tell whether they're good at managing credit or not, because they've only got one current account, and they live at home with mum and dad. So it's making sure, you know, you're on the electoral roll. That will help build up your score. And it's just another way to verify you are who you are as well. Yeah, like you said, there are these cards. Doesn't have to be one that is a what was it, like a credit builder, credit score builder.
I mean, I
card.
think that's just how they like group them on like money supermarket type websites, but I don't think they're specifically called that. I think they're just grouped because they're quite easy to get, I think.
And then just getting perhaps a credit card and making sure that the limit's really low, so like £400 or something, so you don't get, you know, encouraged to spend on it, and then putting £20 on it and then clearing it straight away. Then that can show that you manage money. I think do that once and then put the card away somewhere at home and just pretend like you don't have it. That's what I would recommend.
Anti-credit cards.
Not anti-credit cards, no. Because I've got credit cards. Actually, I've got one credit card. Not anti-credit cards, but I just think, like, if you know I think you either know, like within you, what kind of spender you are, and whether you're like, woohoo, free money,
Yeah.
like I was.
Yeah.
I'm not gonna sit here and be like, oh yeah, like I'm really good with my credit card. You know, there was a time where I wasn't, because I was like, oh, it's fine, like I'll pay the minimum, but it builds up, and then that's just where it becomes that's where it then becomes a problem.
Yeah.
I think if you recognize what a credit card is, what it can do for you, and know your limits, then it's fine.
Yeah.
Yeah. So I think, yeah, and again, it's that whole talking to people and educating your teens and things before you get a credit card on what a credit card actually is.
Yeah. I think it's really important, especially as a teenager.
Yeah.
To understand these things, because I think I'm like you. I wasn't good with my spending either. When I would say maybe like 1920s,
yes,
I applied for a credit card, and I was
same
like,
as
oh
me.
yeah, I'm gonna buy some stuff.
Yeah, and it's like, oh, it's okay because I'll just pay it next.
Yeah, I'll just pay it when I get paid.
But then it's that vicious circle, isn't it? Because you're then eating into your salary to pay off what you spent on the card last month.
Yeah.
And then that whatever you're left out of your salary isn't going to last you to the end of the month. So then you're going to use your credit card again. And then it's that whole, like, then you're in that circle.
Yeah.
That cycle. And that's when it can then snowball. And I think as well with teens, and well, probably not just teens actually, but there is a lot of keeping up with appearances. And so-and-so's got this, I'm going to do that. And especially with Instagram as well, like they'll see people having, I don't know, like Gucci belts or whatever it is, and they're like, I want a Gucci belt, I can get that on my credit card. And it's just like, you know, in the grand scheme of things, like that's not important. That's not important enough for you to get yourself into debt and financial burden as well. So yeah, those are the things that I would love to work on.
And I know you mentioned like the credit agencies like Experience, Equifax and stuff like that like hold your information. But I saw on your Instagram as well that you're saying lenders now also sometimes look at your social media profiles.
Yes.
What are they looking for and why?
Why is the amount of messages I got after that, like, no way.
Yeah.
So they don't have like a secret gateway into your profile. If you yeah, don't worry, they don't know your passwords and things. They're like, if you're not private, hang on, if you're not public, wait, no, hang on, if your profile was private, they can't really see a lot. They use Facebook and other social media platforms just to kind of verify the application.
Okay, so
yeah, okay. So it's not to kind of like, you know, find out stuff about you like that happened when you were in high school or at uni or whatever. It's just to kind of, you know, it's just another tool to verify what's been said on the application, because some people kind of fabricate some stuff. Like they might forget they've got children and don't put that on the application form, and then the lender will then go on to Facebook and see a cover picture of the whole family, and then it's like, well, yeah. So it's for those kinds of things.
So they're not going to be like, oh look, she did buy that Gucci belt.
Yeah, no. But then at the same time, like if you know, like I think I put it on my actual post, if you're private and you put statuses that you hate your job and you're wanting to leave or something like that, that's going to, you know, make the lender think, well, are they going to leave? Like then what's going to happen? Those kinds of things. And a lot of the time those things are said as like banter and just for kind of like, I don't know, for the sake of it, really, isn't it?
Yeah, like Monday blues kind of thing.
Yeah. And or like, you know, Sunday after having a heavy night out, you're like, oh God, I got so drunk and now I'm really like broke after the weekend or something like that. Again, that's probably something that's just said for the sake of a like, really, isn't it? But then the lender might look at that and think, well, they can't manage their money. So it's just being careful and mindful of what you're putting on social media and who can see that and what impact. And also, you know, if you're a business, if you're a self-employed person, they'll look on your website again just as like a second tool to verify the business, it's legit, it's up and running. And if, you know, you're expressing that you're not busy on there for whatever reason, again, they will take that into their decision-making process.
Wow. But then whatever their decision is, they don't really go into detail about why. If they decline it, they don't really tell you why, do they?
Yeah, so, well, on the surface, we'll get a message to say this case has been declined. And it's then up to the broker whether they go and dig a bit deeper. So I always like to phone the lender and ask them why and get as much information. So then I can work with my client to find another solution, or see if I can get that decision overturned, because sometimes you can. Yeah, so I don't ever just leave it at that and think, oh, it's been declined, I can't help you. I will think, why is it being declined? And let's see what we can, is there another option for you based on this, or can we get this one overturned? So, yeah, sometimes they do.
Okay. I kind of want to talk a bit about you as well, like as a woman in business, because I feel like it's a topic. I mean, I'm really passionate about like women in business and women's empowerment and anything to do with that. And I wanted to ask you, like, what is it like working in quite a male-dominated environment? And like, how do you make yourself stand out as an authority in your field?
Yeah. So, such a good question. How I got into the industry was a complete accident, really. So I was made redundant from a job, and like you, I've worked from quite a young age. I had my first job when I was 13, and just always worked, always wanted to work. So then when I was made redundant, I was like, crap, like I haven't job at the end of the month, what am I going to do? And it came at a time where I needed to work because I just moved out and I had rent to pay and bills to pay, and I was like, for the first time I've got a job where I actually need one.
Yeah.
I'm made redundant. So my partner said, oh well, my dad, he needs some help in his office, he needs like a PA. So why don't you go and work with him whilst you find a job? Because it's easier to find a job whilst you're in a job and you're not then worrying.
Yeah.
And it's kind of like, it helps him and it helps you. And I was like, oh, okay, cool, yeah, I'll do that. So then did that. And he's a mortgage broker. So I kind of just went in there as if you're just being a PA for a bit, and whilst looking on Indeed. Went there and don't think I really looked on Indeed after that. I just kind of stayed, but it was one of those things where there was like a mutual understanding that we're not committed. If I want to leave, I can leave if I find something, and you know, equally it wasn't a permanent thing.
Yeah.
But it ended up being a permanent thing. I just stayed and worked my way through the different roles. So I went from PA to being mortgage administrator, and then obviously qualified and became a mortgage broker. And when I was a PA, I had like the vision of me being a broker. I was like, I'm going to become a broker.
Yeah.
I really want to do this. And then I was like, I want to become a mortgage admin because I wanted to know the whole process. I didn't want to just, because it was so new to me. I never would have applied for a financial service role at all.
Yeah.
Everyone who, like, if I like see someone that I went to school with and they're like, what are you doing now? And I'm like, I'm a mortgage broker. They're like, are you?
Yeah.
Did not see that coming. Yeah, it was just completely unexpected. But that office that I was in, I was the only female broker.
Yeah.
And I was the youngest as well by, I would say, 40 years.
Wow.
Yeah. So it can be intimidating. I'm not gonna lie about that. It's I don't know how else to describe it really. And I think the industry, like the people in the industry, like you said, it's male dominated and they're of a certain age, and it's very like stuck in their ways. And I was, you know, in my 20s, and I had these like, well, I wanted to work with teenagers, and I wanted to get my knowledge across to people and help people, obviously not just teenagers, but, you know, people who are my age in their 30s and their 40s who don't have access to this information. And I wanted to make it accessible for them and kind of make something that is boring on the surface a bit fun, if I could possibly do that. And I had all of these ideas and ways I wanted to do that, but I just kept getting shut down and told no, and I just couldn't understand. Like, I'm okay with being told no if I can understand why, but there was never a why, it was just a no. So that was hard for me because I just felt very restricted. And then obviously I've changed firms, and that's what I mean when I say that I've been given a place to thrive really now, and I'm able to do the things that I wanted to do. And yeah, it's been really good. So yeah, like I said, Sarah's given women a space in the industry to have the best of both, really. So it's women who don't have to, it's like you get told you can have one or the other. You either have a family or you have your career, and it's like, but why can't we have both? I think we are amazing women. We can do a lot of things, we can spin a lot of plate, but we're told we can't. And that's, I think, what's frustrating for many. But yeah, we don't have that. I don't have that now. It's, yeah, so I can be a mortgage broker. I can also do the things that I wanted to do outside of that, as in, you know, help people understand the world for mortgages. But then also be, I mean, I don't have children, but I've got a family, and I could be there for my family as well. And, you know, when I then start a family of my own, I'm not going to have to let my career go. Yeah.
Like, do you think you'll stay with the Mortgage Mum, or do you think you would branch out and like create your own thing moving forward?
Yeah, so I think I would stay with the Mortgage Mum. I mean, yeah, there's no reason for me to branch out, because although I'm with the firm, I'm self-employed, so I run my business within the firm. So I've got my own company, and that can grow, but within mortgage broker, like, it's because of all the compliance and the regulations and everything like that, it's hard to start your own. And the support that we get with the Mortgage Mum, I just think like there's power in numbers. And what we're a part of at the Mortgage Mum is amazing. It's a movement within our industry.
Yeah, that's amazing.
Yeah, it's like a here come the girls kind of thing. Yeah, we're, you know, we are as we say, making waves. So it's great, and it's special to be a part of.
Yeah, I love that as well. It's very, I saw the website, it's very like feminine, and obviously there's pictures of sorry, what did you say her name was? Sarah? Yeah, I think it's Sarah with her kids, right?
Yes.
Yeah, like it's very homely as well. Like it doesn't look corporate or like your typical like mortgage brokerage firm or anything like that. So yeah.
Oh, that's so nice to hear. But yeah, no, that's the vibe we go for. Yeah, because we're not, that's the whole thing, we're not stuffy people in suits. We're humans. We don't judge. We don't expect you to know everything. We want to help you to have an understanding of things, but we're not judging you because you don't. And I've had that so many times where people have said, I'm sorry to come to you for this, but I feel like I can approach you more because the last broker I spoke to made me feel really bad and made me feel really stupid and all of this. And I just think no one should make anyone feel like that. And it really upsets me that people are being made to feel like that and then are scared to ask for help again because of how they were treated before. So I'm glad that that's the feeling you get when you go on the website.
Yeah. And then what are your plans in terms of your own portfolio, and has this changed with like the current situation?
So, well, we own this house that we're in now. So we bought this, well, it was 4 years ago now, which has flown by with first time buyers. We are looking to move, I'd say in about 2 years or so, because I need to wait a bit longer because of my how long I've been self-employed.
Okay.
And yeah, so we're looking to move and kind of, get more of a family home. But then we are keen, I come from a portfolio family. I'm keen to get a buy-to-let.
Yeah.
And yeah, that hasn't really stopped, the recent events and everything hasn't really made me think, oh, perhaps I'm never going to be able to do that. I just kind of think, we'll just see if I'm ever in a position to, which I hope I am, I'll go for it. Yeah. I think we need private landlords.
For sure.
Definitely need private landlords. And it'd be a shame to see. Yeah, I hope people are still interested in becoming them, because it'd be a shame for them not to be.
Okay, well, we're actually running out of time, but
oh my God, it's flown by.
yeah. I always finish my interviews with top three, which is just 3 questions, and they're all basically like top 3 tips or advice.
Okay.
So top 3 tips for anyone who's interested in buying a home, but they don't really know where to start or what products are available to them.
Okay. Speak to a broker.
Yeah.
That's not a plug, that's just genuine advice.
Yeah.
Because they will hopefully be able to, put your mind at rest. It's overwhelming. The process is overwhelming.
It is, yeah.
So if you can find someone that's going to make that less overwhelming for you, then definitely do that. I'd say when you're researching properties and areas, think of what you want from those areas. So what you're interested in, are they local amenities really, and travel costs. That's key. And keep saving, even when you've reached your 10% deposit, just to keep saving, because for fees on top of it, it doesn't just stop and start at your deposit. So it's just making sure you've got enough of a reserve as well.
Mm-hmm. Okay. Top 3 books or resources about property and or taking care of your finances.
Oh, Go Fund Yourself. I'm trying to think of the author's called. She's called Alice, and she's on Instagram.
Okay.
That's amazing. I would definitely recommend that. And I can't think of any other ones other than that one. It makes sense. It's approachable. It's young. Yeah, I would recommend that one. And that's the only one I can really recommend.
Is that for finances in general, or is that property specific? Okay.
Yeah, it's finances in general, and also like helping you to get onto like the property ladder as well.
Oh, nice. Okay.
Yeah.
Do you follow any people that are like not finance people, but people that talk a lot about like managing your money?
Yes, I do. She is hilarious as well, which helps. I'm going to get my phone up just so I get it right. But she is called, I think she's called the Broke Generation.
Okay.
Which is good. But the Broke Generation, her name is Emma, and it's finance, money and career, making money management interesting. And I would definitely give her a follow because she has some great tips. She lives in Australia. She's a Brit that lives in Australia.
Yeah.
So a lot of it's like in dollars, but obviously it makes sense still. And she has some really good tips on there. So I really recommend following her.
Okay, awesome. And then top 3 tips for women who are working within a male dominated environment.
Like, stand your ground. Don't be intimidated by the lack of your female colleagues. Stand your ground. You know your stuff. Don't doubt yourself. I think that's something that I used to do a lot. I used to feel like I didn't know my stuff, but actually I do know my stuff. And I think, like reminding yourself of that, even if it's like daily, like, you know what you're doing, you know your stuff. Just keep repeating that. If you ever feel like you're doubting yourself, be clear, I think, on on your vision and your why, because I think when you have that, you have the power. You've got a power, because when you know what you're doing and why you're doing something, no one's going to stop you. And I think it sounds really silly, but it's definitely helped me a lot. And focusing on your why, and you kind of just block out the noise of doubters and people's opinions. Surround yourself with people that share your values and support you, because that's key.
I think it's super important as well, your circle. Well, thank you so much for coming on. I've loved having you on.
Oh no, thank you, it's so nice to meet you.
And how can people connect with you following this podcast?
So you can connect with me on Instagram. That's probably where I'm the most active. I am on Facebook, I am on Twitter, but I'm just trying to think what my Instagram handle is, but I am Sonya _ the mortgage mum on Instagram. And you'll know it's me because my profile's very pink. But that's where you can find me.
You definitely don't, your profile, definitely doesn't look like your typical broker. It's kind of got this like blogger, like influencer vibe to it.
Oh really?
Yeah, I love it.
Thank you. Thanks so much. That's really nice to hear.
Oh, well, thank you so much for coming on, and I look forward to see what you've got happening and like how your career progresses with like working with teenagers and stuff. I think it's amazing.
Oh, thank you so much. I'm really excited about that too. But I'll post whenever I do anything like that. I'll post it on, and you can see.
All right. Well, thank you so much, and I'll see you soon.
All right. Take care.
Bye.
Bye.